Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, the world is flush with positive economic data, but consumers do seem wary and uncertain about their prospects and outlook. China released trade data for October over the weekend, and it was impressive. Exports grew 27% year on year to $300 billion, slowing from a 28% surge in September, but beating market expectations of 24.5%. Global demand is clearly very good. Imports had a different profile, rising 21% to $216 billion, and that was below market expectations of a 25% gain, but better than the 18% rise in September. That meant their trade surplus rose to a record $84.5 billion in October. The politically sensitive surplus with the US actually narrowed slightly to $41 billion. The bigger surplus also means that their foreign reserves rose slightly by $17 billion to $3.2 trillion in September. But part of their increase in imports was for more coal to run their electricity generation plants. They almost doubled from October 2020 and have been running very high all year. But at least they can now claim that their power crisis is behind them. In something of a surprise, Japanese household spending jumped 5% in September from August. That's a large move for them. It has reined in the year-on-year decline quite a bit. A rise was expected in September from August, but the one delivered was about twice the expectation. In the US, Congress has passed a $1.2 trillion infrastructure measure, and the President will sign it into law. A delayed victory after splitting the $1.75 trillion for healthcare, education and climate change programs out of the overall measure to be worked on later. The infrastructure deal is a measure that won't hurt their labour market. In any event, US non-farm payrolls came in better than expected, with 531,000 new jobs added. This happened despite a shrinkage of 73,000 in the public payrolls. A gain of 450,000 was expected. Average hourly earnings rose the expected 4.9% in October from a year ago, basically keeping pace with headline inflation. And there's been more confirmation that the US expansion has legs, with the release of September consumer credit data showing a much stronger than expected 8.3% rise in the annual rate. Meanwhile, in Australia, the RBA's latest statement on monetary policy said it expects a rapid economic recovery in Australia and has lifted its GDP forecast to 3% for 2021, then 5.5% for 2022, before returning to about 2.5% for 2023. The US Treasury 10-year yield opens today at 1.46% and up 2 basis points from where we left it on Saturday. And the price of gold will start today at $1,818 an ounce, another $5 rise from this time on Saturday. For the week, it's up $35. And oil prices are little changed since Saturday at just on $80.50 a barrel in the US, while the international Brent price is just on $82 a barrel. And the Kiwi dollar opens today little changed at just on 71.1 US cents. Against the Australian dollar, we're marginally firm at 96.3 Australian cents, and against the euro, we're also marginally firm at 61.6 euro cents. That means our trade weighted index starts today at just on 75. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.